Imagine it's a random Monday morning in 2026. You wake up, reach for your phone, and try to check your balance, just a routine check. But the app won't open. You refresh. Nothing. You assume it's a glitch, so you drive to the nearest ATM. But when you get there, the line is 3 blocks long. People are frantic. Someone is shouting at a closed glass door. When you finally reach the machine, a cold, digital message appears. Withdrawals temporarily suspended by government order. Your heart drops. That money isn't just numbers on a screen. It's your rent, your groceries, your children's tuition. It's the product of years of your hard work. And suddenly, you can't touch it. This isn't a scene from a dystopian movie. This is the banking trap. And by the time this video ends, you will realize that the money you think you own in your bank account isn't actually yours. The rules of the game have changed while you were sleeping. Welcome to Finance Unmasked. Today, we are exposing the 2026 financial reset. Let us start with a truth that 99% of people refuse to believe. When you deposit $1,000 into a bank, the bank does not keep that $1,000 in a vault for you. Legally, the moment you hand over your cash, you are no longer the owner of that money. Instead, you become an unsecured creditor. You have essentially given the bank an interest-free loan, and all they've given you in return is a digital promise to pay you back, if they feel like it. Through a system called fractional reserve banking, the bank is allowed to take your $1,000 and lend it out 10 times over. They are creating money out of thin air, charging interest on it, and gambling with your principal. In 2026, the global debt has hit a staggering $300 trillion. The banks are sitting on a house of cards that is soaking wet. But here is the part they never told you in school. What happens when the bank gambles your money and loses? In the past, the government saved the banks. In 2026, they have a new plan. And this time, you are the one who pays. We all remember 2008. The bailouts. The government used taxpayer money to save the too-big-to-fail banks. The public was outraged. So, the elites came up with a much quieter, more dangerous solution, the bail-in. Under the Dodd-Frank Act in the US and similar laws in the UK and EU, banks no longer need a government bailout. If a major bank faces a liquidity crisis in 2026, they have the legal authority to seize your deposits and convert them into bank shares. Think about that. Your $50,000 life savings could be wiped out in an afternoon and replaced with bank stocks that are worth zero on the open market. This already happened in Cyprus in 2013. Depositors lost up to 60% of their savings overnight. You might think, not in my country. My deposits are insured. But ask yourself this, if the top 5 banks in America fail at once, does the insurance fund actually have enough cash to pay 300 million people? The answer is a terrifying no. The insurance is just another layer of the illusion. The trap is already set. The only thing missing is the trigger. As we move further into 2026, the elites are preparing the final piece of the trap, Central Bank Digital Currencies. They will tell you it's for your convenience. They will say it's faster and more secure than cash. But there is a dark side to digital money that they aren't mentioning. CBDCs are programmable money. Imagine a world where your money has an expiration date. Spend it by Friday, or it vanishes from your account. Why? To force economic stimulation. Imagine your money being linked to a social credit score. Did you post something controversial online? Did you buy too much meat this month? Denied. Your digital wallet is locked until you comply. In the banking trap of 2026, you don't just lose your privacy, you lose your agency. You become a tenant of your own wealth, paying a subscription fee to the central bank just to exist in society. Why is 2026 the breaking point? Because the cracks are finally too wide to hide. The commercial real estate market is collapsing. Trillions of dollars in office buildings are sitting empty, and the banks that funded them are bleeding out. At the same time, the world is moving away from the US dollar. Nations are trading in their own currencies, leaving the Western banking system isolated. When the petrodollar dies, the ability of the banks to hide their insolvency dies with it. The elites know this. That's why you see them selling their stocks. That's why you see them buying thousands of acres of land and building massive bunkers. They are exiting the system they built, while they keep you distracted with low-interest savings accounts and easy credit cards. The door to the exit is narrowing. Once the digital curtain falls and the CBDCs are mandatory, the trap will be locked. The question is, what are you doing right now to ensure you aren't stuck inside when it happens? Financial freedom isn't about how much money you have in the bank. It's about how much of your wealth is actually under your control. The banking trap is designed for the complacent. It's designed for those who believe that the system will always protect them. But history shows us that in every great reset, the majority is sacrificed to save the few. Here at Finance Unmasked, we don't give financial advice. We give you the truth that the mainstream media is paid to ignore. Look into hard assets. Understand decentralized systems. And most importantly, stop trusting the digital numbers on your screen as if they are reality. The 2026 reset is coming. Are you a creditor to a failing system, or are you the master of your own destiny? If this investigation opened your eyes, hit the like button and share this with someone who still thinks their savings are safe. Comment Unmask below if you want our next deep dive into the tech feudalism of Silicon Valley. I'm Sam. This is Finance Unmasked. Stay alert. Stay sovereign.